Good morning, everybody. This is Michael coming to you from GammaEdge on Tuesday, September 19th. Today we're going to be reviewing our market model. We'll be looking at the market structure, and then we'll be looking at the pre-market price action heading into FOMC on Wednesday.
Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today.
So we'll go ahead and jump right into it. We're reviewing our GammaEdge summary for this morning PDF that's been posted for all the members. Make sure you review the commentary. Again, short-term bearish and otherwise long-term bearish environment for our market model, which continues. We saw accelerated selling into the close yesterday. So again, tick continues down until we see a significant change back to the upside. We continue with the bearish bias to the downside. PM complex, combo complex, and zero DTE are all labeled out there for the commentary. Make sure you understand where we're at within the overall structure and transition and the levels that we'll be looking at. We'll go ahead and jump right into the PM complex. PM settled complex, all expiries turned on. We actually look at the transition, which is almost the same as yesterday. We had a narrow transition for 44.65 to 44.70. That was our supply level that we came right up to, and then we got rejected pretty quickly off of. It's expanded up to 44.80 for that transition level on all expiries. Again, in the money and out of the money, significantly put dominated. We really don't see any out of the money call speculation really start to come in until 45.20. So will be important today to watch this transition as we head into the FOMC on Wednesday. 44.50 to the downside is extremely important, and then we have 44.25 and 4400. Seems to be targeting all the way down there to 4400 is pretty significant and might be the direction we head if we see weakness below 44.25. Again, key important level we'll be watching today to see if price action reacts around that level. So we'll go ahead and jump to the zero DT, and we'll look to see how it looks. Zero DT, again, narrow transition. It's actually moved down slightly from yesterday, so again, that's a bearish look. You'll notice 44.25 sticking out pretty significantly in the money and out of the money put dominated. We do have a little bit of positive net delta in there at 44.70. Really not anticipating us to get above transition or 44.70 at all. We're void of any out of the money call speculation to the upside. Totally put dominated there. A significant amount of put domination above us. And then to the downside, we'll be watching 44.25, as I said. The net deltas drop off pretty significantly below 44.25, so pushing down to 4400 may be a little bit of a stretch today. Plus one DT heading into FOMC. We do see the transition move up slightly, but again, in the money and out of the money put dominated. Really no call speculation. 4500 to the upside. 44.75 to 44.80 to the downside. We see 44.35 and then 4400, pretty significant. Again, that 4400 level will really be the line in the sand to the downside to watch if we get significant weakness down to there. We need to cross below 44.25 first, but then down to 4400 would be a viable target to the downside. Balance of the week after today, or through today, sorry, all the way to Friday. Again, same transition level, so you'll notice that continues across the whole expiries. You see this 4400 level sticking out pretty significantly. Again, as we've discussed, could be targeting down to that level. No call speculation to upside in the money and out of the money put dominated, and then 4500, significant amount of puts sitting there. So getting above this level, even post FOMC, may be extremely difficult. And still, we have to get above transition to move to the upside. Would be the first step that we'll watch. Again, 44.25 and 4400 to the downside. Here is the combo complex. The transition widens out a little bit, 44.60 to 44.85. Again, in the money and out of the money put dominated. We do have positive net deltas below us at 44.25. So this again may be a level where we see some supportive type demand action into that level. And then 4400, we have a significant amount of in the money calls sitting there. So anticipation is that we would come down to that level and then see some sort of price reaction into there. 380,000 contracts, 19 billion net delta, a significant amount of liquidity sitting there. Again, we have to get below 44.25 first and then move down to 4400. Here's a landscape view. Negative GEX has moved up to 4400, which again can be a bearish look as the out of the money call speculation drops and then brings the net GEX up. We've seen a significant amount of put speculation to the downside increase. 4,500 is here, and then plus Gex is 4,600. And then we really have that transition right in the middle, very well defined. You see 4,500 to the upside and then 4,400 to the downside. We've been seeing that targeting on the vol U command. I posted last night through the Friday expiry. The targeting on the vol U command is 4,400 and 4,500. So that really would be that range I'd anticipate us staying in post FOMC, unless we see some uncoupling and kind of unhinging, and we see a significant amount of downside put speculation and call speculation close. But anticipation is we'd stay between 4,400 and 4,500. Again, the tick, extremely important to watch throughout the day. This is what I was talking about in the morning yesterday. We did start seeing some consolidation sideways through 11 o'clock. But really the filter tick was below zero, cumulative tick below zero, new highs or new lows continue to outpace new highs. And then we got that afternoon selling starting to come in. Not a significant amount of filter tick, but again, weakness into the afternoon. We stayed below all the moving averages, and the negative slope continued. ARCX again, we had that sideways look, and then we sell off into the afternoon. We'll go ahead and look on the PDF. You can see this very easily here. So again, cumulative tick market model. Again, significant to the downside. This is just the bolded white CT by itself. We saw that sideways consolidation, and then again, increased selling back to the downside. So we can't even really stay above a previous close or a previous high. So until that happens, we give the edge to the bears. Again, market model, CT railroad track off. We discussed this last week when we turned off here, and then on Monday, a significant move to the downside, and the railroad track continues, and we see expansion of the moving averages in the bolded CT. Again, here, negative slope continues to increase to the downside on the red below cyan, and then the short-term CT again increase to the downside, and the colored ribbons turn on. Negative slope continues to increase to the downside, and railroad track on the CT. So until you get a state change in the at least the CT for a short-term look like we had over here that is sustained, again, we continue to look for the downside bias and the bearish bias. Pre-market price action extremely weak. SPY continues to drop. Qs continue to drop. IWM continues to drop. I'll really be watching this yesterday's low on a SPY at 442. The Qs down here at 368, and then the SPX yesterday low roughly around 44.40. We'll see how COTMP plays on the morning trading view run. But again, 4,400, 44.25, and 4,400 look like likely downside targets. To get back to the upside, again, we'd have to stay above 44.50, at least stay above yesterday's low or get above yesterday's low, and then watch COTMP here. So again, a lot of pre-market morning weakness. We saw this on Friday, OPEX day. We had a significant amount of dealer adjustment pre-market, like we are seeing here, and then we just continued with the selling the rest of the day. I'm not saying that's what's going to happen today, but again, just be cognizant and mindful of what's happening. These are dealer adjustment bars. Pre-market, pretty significant dealer adjustment bars. I'm on a 10-minute time frame. So this is really not 2 to 5 minutes. These are significant dealer adjustment bars to the downside on SPY, Q, and IWM. So let's make sure you do your if this then this today. Again, anticipating more market weakness. We do have expiration this morning, and then we have FOMC tomorrow. I'm not really anticipating significant moves today. Expected move for the 0 DTE was 1.13%, or sorry, combo complex, 1.13%. So really not a significant move to the upside or downside. Really just probably most likely some morning weakness, maybe into the lows, and then maybe a slight bounce back up, and then some chop around into FOMC. So we'll see how that plays out. Paul posted the commentary for our if this then this plans. Make sure you're checking that out. Really just the takeaway is that we are significantly put dominated. We have transition above us, which we need to get above and stay above. If we get below 44.25, I'd anticipate weakness down to 4,400, and then probably stalling into that level. So, all right, hope that helps, everybody. Have a great day. We'll see you in the Discord in a few minutes. Thanks.